Noon all. I just want to start here today with the balance sheet for the 2010 paper. So, as you see, first of all, I've just done out a quick template of the of what it's going to look like as we go through it, just to save a little bit of time. And this would probably take 2 to 3 videos to go through anyway. So this is the first of them. So, first thing, heading: balance sheet of Elms Nursing Home on the 31st of the 12th, or as at the 31st of the 12th, if you prefer. 09. It's important to get that right. There's often a mark going for it. Then our fixed assets, cost, depreciation, net book value, and you'll need 3 columns for this in total. So, to start with, the buildings and grounds. So that's the most straightforward one anyway for a start, because it says at part 9, Elms Nursing Home decided to revalue the buildings on the 31st of the 12th, 2009. That means they get a new cost of 900,000 in your balance sheet. So we can put that in, 900,000. It means we set the depreciation back to 0, and our net book value must also be 900,000. Okay, equipment is the next thing. And the equipment, if we look at the top, it says 45,000 up here at the start of the year. There was no sale of equipment. There was purchase of equipment though, 15,000 here. So 45 and the 15 is 60,000. That's the cost of the equipment there, 60,000 rather. And then I'm just going to do a little calculation here for the depreciation on equipment. So, excuse me. The depreciation we can get from what we've done earlier. So I'm just going to bring this over here. If we go back to our statement of capital and reserves, we see that the equipment at the very start of the year we'd already built up 20,250 worth of depreciation. Now since we didn't get rid of any equipment during the year, then that 20,250 still holds. So I'm going to put that 20,250 in here for the first part of my workings. So that was up until the start of the year, and then we further depreciated equipment during the year. So if I go and check my profit and loss account, I see that depreciation on equipment during the year was 9,000 here. So we add that to whatever we had at the start of the year, and we'll have our total depreciation at the end of the year. So plus 9,000 gives me 29,250, and subtract that from the 60 gives me the 3750. Okay, so that's that. Minibus then, there was a little, something happened with minibuses during the year. Well, at the start we only had one minibus and it cost 50,000, but we got rid of that during the year. We saw that in point 8 here, that the minibus was traded in for a new one, and the new minibus we got had a cost of 42,000. We see it here, 42,000. Okay, so that's got to be our cost in here, 42,000. Now the depreciation side of it, even though during the year we calculated depreciation for the first 6 months and the second 6 months and added them together for our profit and loss account, well, the first 6 months depreciation doesn't go into our balance sheet at all, because it was depreciation on the old minibus, and the old minibus is gone, so is its depreciation gone with it. So all we really have is the depreciation that we calculated on the new minibus, which was 42,000 by 20% and then by 6 months or half a year, 6/12ths, and that worked out to be 4,200. So we've already done that calculation as well earlier question. So that, subtract that, gives me 37,800, and then the totals here, well, I'll let you total that in your own time. Let me just total this one though. 5 and 9, what's that? 8, 6, 9. Okay, all right. So that's the balance sheet. Okay, so next thing is the investments. Now you can, if you want, have like a financial assets heading there, or just stick the investments straight in as they are. Now the investments, again, the figure can come straight out of the statement of capital and reserves that you did at the start, and it was in that it was 30,000 the investments were. Okay, so then, as I say, again, you can wait. You don't have to add these two together right now. You can wait until you've got your net assets down further, or you can total it now and then add on the further one afterwards. So I'm going to total that now, and it gives me 998550. Okay, but as I say, you don't have to do it just yet. Right, moving on to the current assets then. I'm going to put the current assets in the first column as well, the figures for the current assets. So the first one is the investment income due, and let me just, there'll be a little working to be done there, I'm sure. So what we have is, at the start of this, it says 5% investments, 30,000. So if you see that there, 5% investments, 30,000. Well, that's what you ought to be getting for the year. So 5% of 30,000 is 1,500. So 1,500, that's what you ought to be getting, and that's the figure you put into your profit and loss account. But what did you actually get? Well, according to this, you got 1,000, but then again, you better check, was any of that for last year, that 1,000 that you received? And there's nothing up on top here about investment income due from the previous year. So if you received 1,000 for this year and you should have gotten 1,500, then you're still short or due 500, isn't it? That plus should be a minus, of course. Minus 1,000, so you're still owed 500. Okay. Then closing stock, shop and oil, that's just to be put straight in. Shop 1,500, heating oil 300, so straight in. Now one thing I'll say there is sometimes they'll give you the figure all in one. They might say closing stock of shop including 300 heating oil is 1,800, something like that. Always separate it out for the balance sheet, always put them in as two separate figures. Okay, cleaning prepaid, so again that's down here somewhere, it's number 2. It says cleaning is done under contract payable monthly in advance and includes a payment of 400 for January 2010. So that 400 is cleaning prepaid for next year. Okay, so that's an asset. Fees due, I just wrote down for short, it's clients fees due, or clients deposits due if you like. That is in part 3 of the additional information here. Trying to get it less blurry. We see it's, oh my word, I can't get this to focus. There it is, clients fees and arrears on 31st of 12, 2009, 500 euros. So that's your fees due. They're in arrears, they haven't paid them yet, they're due to you 500. Now the other thing we would ordinarily look for as well is to check if there was a bank up here, but you notice that the balance at the start was on the debit side, which meant that you had money in the bank, 8,250, but the balance carried down is also on the debit side, which means that at the end of the month or at the end of the year period, you've got an overdraft of 75,450, so that doesn't go into the current assets. So all we need to do now is to total this up. I'm going to total that, and the total for that is 3,200. Okay, and I'm going to leave it at that for a moment.